Well, good afternoon. Happy Friday, August 8th. Mark Milan here, your mortgage professional. Not a bad week for mortgage interest rates. We're finishing out on a fairly decent level, pretty much akin to where we started the week, maybe a little bit better on some note rates. But boy, a lot of headlines and a lot of anticipation for what's coming next Tuesday. Let's cut right to that. So next Tuesday, we get the next reading of the Consumer Price Index. Now, mortgage rates have been the beneficiary of a very weak labor report 1 week ago today. So 1 week ago today, we got non-farm payrolls. The revisions to that report for the prior months really have helped mortgage interest rates improve over the past week, and a lot of home buyers have benefited from that. But as we approach next Tuesday, the next inflation reading, the Consumer Price Index, if we see upward pressure on inflation, we might see a lot of those improvements reversed. It's going to be very important to pay attention to what happens next Tuesday morning, because it will tell the tale not only for what's happening for mortgage rates in the short run, but what the Fed might do on September 17th. Currently, it's widely projected that at the next Fed meeting on September 17th, we're going to see the Federal Reserve cut the Fed funds rate for the first time in 2025. But let's get to a couple of pieces of information. I'm going to flip the screen around here and we'll talk about the big question of the day. Have agent commissions changed since the settlement last year with the NAR lawsuit? And it's very interesting data as you dig into this. So the headlines were predicting massive declines in real estate commissions, and that most were predicting that home prices would fall as a result of the lawsuit that the NAR lost or settled for agent commissions. And when you dig into the numbers, you'll actually find that prior to September of 2024, that average agent commissions were 2.65%. This is from Real Trends Consulting. Since September 30th of 2024, the average agent commission has risen to 2.71%. So all of that promise of massive declines in real estate agent commissions and massive declines in home prices just not playing out. And I think those of us in housing knew that this was not really the point of this lawsuit. It was maybe a little bit more lip service for the media than it was the ultimate end goal. So interesting data there. Let's move over here and talk about what's happening with house values, because according to John Burns, we've got 35% of the United States housing market now in a decline. So 53 of the 150 markets now showing slowdowns. These include hotspots like Texas and Florida, even areas like Atlanta creeping in there. If we go down to the very bottom, we'll see Housing Wire data. 366 markets they look at, 168 are roughly 46% have increased or have experienced year-over-year declines as of July the 11th. So no conflicting data there. We are starting to see some home values in certain pockets of the country start to come down year over year. And listen, all healthy markets correct. And that's the thing we need to remember, not only in housing, but if you're outside of housing, is that the stock market, the bond market, and yes, even the housing market must go through periods of healthy correction. This is not a crash. This is a correction. And I think we can anticipate seeing anywhere from 5%, maybe upwards in some markets, to 10 to 15% of housing value correction, especially in light of the run-up in appreciation that we got over the past 5 years. Housing has appreciated or surpassed the appreciation levels of about 50% over that time period, and wages simply haven't caught up. And ultimately, this is eventually what will happen, is a correction to the market, but not a crash. One last thing we'll talk about is that the president has been making plans for an IPO for Fannie Mae and Freddie Mac. Ever since November of 2008, Fannie and Freddie have been under government conservatorship, the Treasury owning 79.9% of these entities. It's estimated that, according to this article, the Trump administration believes it will raise $30 billion from the initial stock offering for Fannie and Freddie. That would make it the largest IPO ever in the history of the world. And I personally think that 30 billion number is way too small. I think it will be higher than that. And ultimately, this is what the administration's been focused on. In fact, we hosted a continuing education class for real estate agents last month and tackled this very topic, this complex, interesting, dramatic topic. I'm going to share some slides with you. From 2015 to 2024, here are the volume numbers in billions that Fannie Mae has funded, right? This is funded volume, and you can see obviously those crazy pandemic years where everyone was refinancing. But prior to the pandemic, it was right there around that 600 billion mark. Now, post-pandemic, we've seen it much lower, down around 370 to 380. Just less volume out there. That should be no surprise to anybody. But what is kind of surprising is what's happened to profits. These are Fannie Mae's net profit pasted over top of the volume levels. In pre-pandemic, you can see the net profit was hovering right around this range. Of course, we got a nice spike here in 2021, but post-pandemic, Fannie Mae's profitability hovering up here. In fact, if you overlay a net profit margin, this is the blue line, you can see we went from a net profit margin somewhere around 1.75% or so up to a net profit margin that's almost 3 times that. How is that happening? Well, Fannie Mae and Freddie Mac have been worsening pricing with G-fees and heavy-handed loan level price adjustments to increase their net worth in preparation for this very IPO. In fact, Fannie Mae just reported in Q2 of 2025 that they've now eclipsed over $100 billion in net worth, adding over $80 billion in the last 5 years, again, in preparation for them to go public and to be released from under government conservatorship. That's exactly where we're heading. If you take a look at Fannie Mae stock, it's certainly up on the news and a story worth monitoring as we move through the second half of the year. If I can be of any service to you over the weekend, don't hesitate to reach out, mark.milam@highlandmtg.com.